The related service engagement is not an assurance engagement. It is a type of engagement. No assurance is provided by the practitioner. If an agreement is performed, agreed upon procedure, the auditor is engaged by a client in issue and report of actual finding based on the specific procedure performed on the specific subject matter and specific element, accounts and items of financial statement. SA 440 provides a guidance on the auditor's professional responsibility when an engagement to perform agreed upon procedures regarding financial information is undertaken in the form of content that reports auditors in connection with the such engagement. The completion engagement is an engagement which is a practitioner applies accounting and financial reporting expertise to assist the management in preparing and presentation of financial information of the entity according to the applicable financial reporting framework. SA 4100 deals with the practitioner responsibility when engage assistant management, which is the preparation presentation of historical financial information without obtaining any assurance or information, and to report on the engagement in accordance with the standard financial reporting system. Engagement documents has been maintained for agreed upon procedures and engagement and complaints engagement. Review is a limited assurance engagement. Limited assurance engagement is a lower level of assurance, lower few procedures and gather sufficient appropriate audit evidence based on the limited conclusion and product. Standards of review engagements apply the review of financial information undertaken by SA 2400. SA 210 as issued as a record. SA 2400 deals with the practitioner responsibility performing a review of historic financial information, and the practitioner is not an auditor of entity's financial statement. And the practitioner objective to accordance with SA 2400 includes obtain limited assurance and primary to perform inquiry and analytical procedure whether the financial information of whole are free from material misstatement, and report to the financial statements of whole are accumulated with the report required by SRE. The prior acceptance of review engagement, practitioner shall determine the practical condition accepting a review engagement. The practitioner perform a review engagement mainly focuses on the inquiry of analytical procedure besides the procedures of addressing specific circumstances. It also perform additional procedures also performed when the practitioner becomes aware that financial statements are material misstated. But under presentation is an obtained evidence where performing a procedure is evaluated and a limited conclusion drawn in the review report is issued. SO 2410 applies a new review of internal financial information preferred by the independent auditor of the financial statement of entity. Internal financial report is a financial information that is prepared in accordance with the applicable financial reporting framework and encompasses a complete or consolidated set of financial information, and the period is shorter than the entity's financial year. The objective of engagement to review the internal financial information is to enable the auditor to express a conclusion whether, based on the review, anything to come to the auditor attention that causes the auditor to believe the internal financial report is not prepared in all material despite accordance with the applicable financial reporting framework. Auditor made inquiry performed analyticals and other review engagement in order to reduce a moderate level of risk expressing inappropriate conclusion when the internal financial is mainly misstated. Review of document shows a repair that is sufficient appropriate audit evidence based on the providing evidence at review of financial statements and inquiries. Assurance engagement means related to engagement by services managed other than the examination of financial information prepared in the financial information. Types of assurance engagement: examination related to prospective financial information, providing assurance related non-financial matters like design, operation, internal control of entity. Statement of assurance engagement deals with the responsible professional account, and assurance engagement deals with the matter. The prospective financial information is the mean prospective financial information based on the assumption about the events that may occur in the future, possible action of the entity. It may be form of forecast, projections, or combination both. SAE 3400 prepare the guidance of engagement in examining and record on prospective financial information, and including examination procedures and best estimation of hypothetical assumptions. Service organization refer to third-party organizations. The segment of third-party organizations provide service to user entity likely to be relevant for the user entity's internal control as a result of financial reporting. Control related to service organization, operations, and complaints obligation must be relevant to the user entity. Internal controls are related to the financial reporting. The SAE 3400 deals with assurance engagement undertaken by the professional accountant in the public practice to provide report to the user by the entities that the auditors and the controls of service organization that provide services to the user entity that is likely to relevant to the user entity of internal control and related to the financial reporting. A pro forma financial information deals to financial information shows together with the adjustment of illustrating the impact of event and transaction on unadjusted financial information and event that occurs transaction that is undertaken a earlier date or selected of particular illustration. The pro forma financial information is normally sent to the offer documents demonstrate the effect of transaction, the financial statements in the company and those transactions that occurs in the earlier date. SA 2420 deals with the reasonable assurance in taking practitioner to report on the responsible party complaints with pro forma financial information, including prospectus. SA 2420 applies to such reporting requires security law and regulations of the Security Exchange and Regulation, in which prospectus is issued with the reporting as a horizontal accepted practitioner of judicial. A digital audit improves the quality of opinion, subsequently leads to more reliable audit report. It is in saving time, cost, human effort, and also utilizes towards mass productive tasks. And this the auditing digitally is using advantages of the technology conducting an effective and efficient audit, which is rapidly growing IT environment is essential for adopting technology in the auditing practice. It is necessary for auditor to understand the key audit of automated government such as key areas including understanding flow of transaction, identification of significant systems, identification mutual automated systems, controls, and technology units. It is also imperative to auditors to identify the risk of arising of IT, and the auditor should consider the nature of identified IT application. The applicable risk arising from the IT is identified into cybersecurity. It is more likely that it is more likely to arise from the IT. The volume of complexity of automated application control is higher. The management is placing greater reliance upon the control and effective processing of transaction and effective maintenance of the integrity of underlying information. Cyber risk is a consideration of business risk. It is necessary for the auditor to understand the cyber risk strategy of the entity. It should include gaining of some knowledge about the cybersecurity framework of the entity. A cybersecurity frameworks include how the management is identifying the risk, protecting the safeguarding the assets, including electronic assets, thereby risk and management preparation of detect the attacks and any anomalies and responding to the emerging event. Apart from having cyber credit risk, procedures of framework and regular assessment of place, management have a strong and updated internal control ensuring that the coverage of cyber risk which controls including control over the entire setup, electronic fund transfer and patching management. Emergency technology in business is also transferring the auditing landscape, data analytics, artificial intelligence, robotic process automation, blockchain, some of the technology. Auditing digital also assess the technology and risk consideration, relying upon the programs which are inaccuracy of processing of data, risk of technological personnel, and gaining access privileged upon the not need or necessary to perform the duties, inability to access the data as required, cyber risk, etc. Group audits. Parent decided it to require it to prepare and present a consolidated financial statement. It would do accordance with the requirement of applicable financial reporting framework system, applicable accounting standards, and relevant financial reporting framework. Accounting standard is on consolidated financial statement of Indian accounting standard 1110. Consolidated financial statements lays out principles and procedures preparing presentation consolidated financial statements under India AS 19. Consolidated financial statements are presented extent rules, some format adopted by the parent and separate financial statement. According to India's 129 other companies act, as a company, two or more subsidiaries, including associate company, joint venture, it shall addition to own financial statements prepare consolidated financial statement of the company and all the subsidiaries in the same form manner as the of own. Section 129 of the Act provides a provision applicable for preparation, adaptation, audit of financial statement. A holding company shall mutatis apply to the consolidated financial statement. The responsibility of preparation, percentage of consolidated financial statements among the things it is in the management of the parent. The principal auditor is consolidated financial statements are responsible for expressing opinion on whether the consolidated financial statements are prepared non-material respect in accordance with the financial reporting framework under the parent prepares the consolidated financial statement in addition to the report on additional matters required by the Companies Act of 13 and other statute of external application. Standard of auditing statements and guidance note and auditing standards issued by the Institute of Chartered Accountants of India apply same manner of audit consolidated financial statement as applied to the audit of annual financial statement. An auditor accepts the audit of financial financial statement. The auditor should access whether the works of shutdown and should be able to express opinion and true and fair presentation of consolidated financial statement. If the auditor is view its own preparation is not enough and sufficient, he can consider use of work of another auditor. Before commencing the audit of a consolidated financial statement, the auditor shall plan their work and enable him to conduct the effective audit of sufficient in timely manner. Specialized consolidation of parent company and consolidation adjustment and the current period consolidation adjustment need to be taken into account while auditing the group financial statements. The parent consolidation adjustment is an adjustment that made only on the first occasion, subsequent occasion, and in this changes the parent consolidation adjustment on the adjustment that is made only on the first occasion or subsequent occasion in which a change in the shareholder of the particular event is consolidated. Example, determine the goodwill or capital reserves or equity attributable to minority shareholders. The current period adjustment is those adjustment that is made in the accounting period for the consolidation of financial statement is done by eliminating the integral transaction and accounting balances. There should be two situations of audit a consolidated financial statement. When the parent auditor is also an auditor of the component and include the consolidated financial statement. When the parent auditor is not auditor of one or more components and therefore use the work of another auditor in the audit. The auditor should, while preparing the report, consider the requirement of standard of auditing SA 700, forming opinion, reporting a financial statement SA 705, modification opinion of independent auditor SA 706, emphasis of matter para, other matter para, and independent auditor report 700, forming an opinion SA 705, modification in opinion SA 706, emphasis of matter para, other matter para, whether the auditor using the work of an auditor, the auditor consolidation using the work of another auditor SA 600. ICC 605 is using work auditor of an internal audit. XI 610 using the work of an auditor expert. When the financial statements or one or more components continue to remain unaudited, the auditor reports on the consolidated financial statement would consider unaudited components as the evaluation of possible modification of the report on the consolidated financial statement. An evaluation is necessary because the auditor and other auditor on the case of may not be able to obtain sufficient appropriate audit evidence relating to the consolidated amounts and balances. Special audit consideration arising in the audit of bank due to preparation nature of risk associated with the transaction and taken scale of banking operation, extensive dependency of IT and process transaction, effect of sanitary regulatory requirement and continuous roll out new products and services. Every bank or company is required to prepare balance sheet and profit and loss according to the form set by the third schedule of the act and or near. Therefore, circumstances of the admit. The Form A of the third schedule of the Bank Regulation 1949 contains the forms of balance sheet and Form B contains the forms of profit and loss account. It is a perpendicular to the state of preparation of balance sheet in the bank usually involves preparation of standard financial statement and consolidated financial statement. Preparation of standalone financial statements involve consolidated branch accounts incorporating various vertical departments in bank, also nationalized bank, public sector bank. These procedures vary between the basis of bank to bank. In case of private bank, of bank accounting in centralized and therefore no concept of mandatory branch auditors. RBI most banks, especially those nationalized banks and public sector accountants, 4 or more depends upon size of the bank decision. RBI guidance the firms of the chartered accountants are acting jointly in auditors. As per the provision of the relevant attachment, auditors of business company is to appoint the annual general meeting of the shareholder. As auditor of the nationalized bank is to appoint the concerned bank acting on behalf of the director. In either case, approval of the Reserve Bank is required before the appointment of me. And technological development and about new challenges of auditor as an auditor required in the conduct of the system. Is responsible for the statutory auditor to obtain understanding of an IT environment and values of controls as per the place of management, evaluate whether the control is operating effectively. Bank is also required to implement various maintenance system and internal control and mitigating risk, maintaining good governance and meets regulatory requirement. Area of the focus aspect of internal control, cash clearing, bills collections and bill purchases and focus. Yeah, and advantages of interbank accounts and credit operation. The audit approach has a designed verification of items and assets and liability, taking the account specialized consideration relevant to advanced general consideration, considerate the major parts of the assets. The audit advances require the major attention on the audit. This exists elaborate, different, detailed control system procedure in bank pertaining to appraisal, sanction, document disposal, review, monitoring, pension, or supervision advice. Audit approach of account advances should be encompassed in designing appropriate audit procedures to obtain audit evidence in all these areas. Concurrent audit of audit is a verification of transaction activities of an organization currently in transaction activity business. The concept of audit is to verify the authenticity or transaction activity within the past shortage time the event takes place. Concurrent audit system is a regarded part of the bank early warning system to ensure the timely detection irregularities or lapses and helps in preventing fraudulent transaction. The important areas are covered in the concurrent audit is cash, investment, deposit, advantages of foreign exchange and housekeeping. Banks are required to constitute audit committee or the board in pursuance of RBI guidelines. One of the functions of the committee is to provide direction, also oversee the operation of the total audit function of the bank. The committees also review the internal inspection audit function of the bank. The special emphasis of the system is quality of effectiveness to term follow-up. This commitment as a review of the system and appointment of remuneration and concurrent audit. Company incorporated under the Companies Act, detrayers or commencing business or non-banking financial institution under Section 41(1) of RBI Act can apply to Reserve Bank of India preparation among the necessary documents for registration. RBI issued certificate registration after satisfying its condition encompassing Section 45(1)(a) of RBI Act 1935. That is why non-banking companies defined in the RBI Act. Financial institution which is a company, and a non-banking financial institution is a company which is in principal business of receiving deposit under the scheme or arranging or any other means of lending or any other manner. There's a non-banking institution is a class of institution the bank may by providing approval of the central government by notification of a original and official gazette. The further is ordered to identify this particular company or non-banking financial company, which is considered to be both assets and income patterns and evidence on the last audit of financial statement. Dated on the principles as business. The company is treated to NBFC when the company's financial assets are constitute more than 50% of the total asset netted, and income from the financial asset constitute more than 50% of gross income. Companies fulfill both the criteria shall qualify NBFC and shall require to register NBFC by RBI. RBI is issuing directors on non-banking financial companies and acceptance of public deposits and prudential norms like capacity adequacy, income disclosure, and asset classification, and responsibility of doubts and doubtful trips. The risk of exposure norms and measure of the monitor the financial solvency and reporting of the NBFC. The RBI has introduced a scale based on the regulation NBFC based on 4 layers and define the base of size, activity, and presumptive risks. The 4 layers are base layer, middle layer, upper layer, and top layer. NBFC is like bank. However, any entities cannot accept the demand deposit through some of the accepting term deposit. They do not form any part of payment or settlement system. The ICGC covers an not available deposit NBFC. No minimum exposure to priority sector acquire NBFC. Every applicable NBFC shall have to take a part of time lag between the account became non-performing, recognizing such a realization security and erosion of the time value of goods charged. And these provisions of the substandard asset and doubtful assets and loss assets and prescription norms. These audit procedure NBFCs are tailored the accordance with the nature of business NBFC and regulatory factors. Besides the issue of reports, accordance with the Section 143 of Companies Act, cover matter of carve-out 2020, statutory audit of NBFC is also required to submit additional report of banking board of directors of the company. The RBI has issued non-banking financial company auditor, Reserve Bank of India, auditor of every non-banking financial to record under the direction of auditor. NBFC submit additional report of the board of directors of company covering the matter respect of this direction. The keys are public sector activities entity fundamental owning controlling central government, any state government or partly central government or one or more government. This undertaking place social economic development of country. Accounts of selected government companies along with the report of statutory auditors about CAG and carried with supplementary audit. The scope of the extent of the CAG is relating to public sector event with relating to the compliance, financial audit and performance audit. Compliance audit is an independent auditor whether the given matter such a time is a substance of the applicable criteria. The performance audit is subject to systematic examination of evidence and providing an independent assessment of the performance of government organization, program, and activity functions in order to provide information to public accountability and facilitate decision making of the parties responsible to oversee initiation corrective action. Our performance audit is usually address the issue of economic efficiency and effectiveness. Comprehensive audit combines aspect of financial compliance and performance audit. All these audit information is need way of holistic assessment is possible. The preparatory audit is auditors trying to bring the case of improper, avoidable, infructuous expenditure, even though the expenditure has been incurred in conformity with the existing rules and regulations. Transaction may satisfy all the requirement of the regulatory audit insofar as the various formalities and regarding rules and regulations, and that is called highly wasteful, which is highly wasteful. Internal audit provides an independent assurance of the effectiveness of internal control and audit risk management process to ensure the governance and organizational activities. It is mandated to all the listed companies, unlisted companies, and the private companies fulfill the criteria for appointing the internal accounts in accordance with the Section 138 of the Companies Act rules and regulation. Internal audit is either the chartered accountants or cost accountant, whether engaged in the practice or not. Not in the profession and may be decided by the board of conducting internal audit is a function of activities of company in terms of selection of Section 138 of the Companies Act. He may not be employee of the company. In such companies within the 138 of the Companies Act 2013, the audit committees of board, in conjunction with the manager and the chief internal audit, is expected to exercise a responsibility in formulating the objective of internal audit. The basic principles governing the internal audit include independence, integrity, objectivity. Each internal audit report prepares on basis of the audit procedures conducted by analysis, audit evidence gathered, and a conclusion reached, all based on the finding of rather than the few derivatives in issued notes. The reporting of internal audit resulting on reporting to at the end of the particular audit assessment, internal audit report covering specific area functioning of the entity in preparing an internal audit, highlighted by a key observation arising. And the assignment. Further, the periodical basis on the close of the plan period. Comprehensive report. All the internal audit activities covered in the entities on plan period of chief internal officer, engagement partner in case of engagement office. Such report is normally done with a quarterly basis and submitted to the highest government and authority responsible for internal audit and generally audit committee. The internal auditors review the following startup and take in the management on the basis of report. No action taken in the responsible time which will draw management attention to the management has not acted upon suggestion or not implementation recommendation. Internal auditor should ascertain the reason. Therefore, the auditor work done by the internal auditor has an important bearing on the work performed by the statutory auditor, evaluation done by the internal auditor in respect of internal control, reliability of financial information, verification of asset, and also required done by external auditor. It is obligatory for the statutory auditor to examine the scope of effectiveness of the work carried out by the internal auditor. For the purpose, he should examine the internal audit department or organization, strength of the internal audit staff, and qualification and its power, exist of independence, exhibition of internal auditor, and discharge of duties, and status of organization. Important factors to determine the effectiveness of the audit. The external audit is part of audit. Evaluate the internal audit function of the extent of uses and the relevant determination of nature, timing, extent of compliance of substantial procedure. External auditor shall use the work of internal auditor function. External auditor determines the function of auditor status and relevant policies and procedures not adequate to support the objective. Internal auditor functions lack sufficiency and function do not place in systematic disciplinary approach including quality of audit. The subsequent standards of internal audit and recommended nature.